Hey folks, welcome to Wednesday, the 27th of April 2022. And certainly this is a month of sorrow for the markets. Yesterday, we've seen really equities getting hammered to the downside, breaching the lows on the week, kind of fulfilling suspicions that we had that we would seek further downside in this bear trending market. So we're going to, as well as this, we've seen tech really, Google taking a hammering yesterday on the downside. Tesla also down, finishing the day 12% down on the day. Kind of mixed in with the margin covenants that Elon has on Tesla stock. But really, to know your apples from your oranges there on the margin that has been, the amount of Tesla stock that Elon has assigned for the deal to the banks. Basically, Tesla would have to be down 80% from the open on yesterday for the banks to actually be able to take call of that stock. Okay, so a little bit of a wobble on Tesla, but look, I don't think it's a big deal. So another thing that happened, which was quite important on that deal yesterday, was the Twitter board found by a vote majority of 10. They found basically 130,000 stock share votes, giving them a margin of 10 to stall the deal. Now, it's come out that Elon actually faces a walkaway penalty of $1 billion on the offer. So, I think this drama, while it seemed like yesterday it was one and done, I think it's going to drag its ass out basically for the rest of the week and probably into next week. So, Twitter and Tesla both getting hammered yesterday on that. Obviously, Tesla more so. But I want to, bring us back down to earth, and let's have a look at the markets as we see them. And the first thing I want to show you is the dollar index. What you're looking at here, full screen, right? Full screen is the dollar over the last 22 years. All right, and look where we are. Trading right up in here. Okay, so this is by no means not a drill. This is serious price action here on the Dixie. Serious strength. We are breaking above that trend I've been talking about, from the 2017 highs and the 2020 highs. We're breaking through. Currently about to test 102.99s, which would be that 2020 high. So that's coming in here, and then above there 103.82 26s, 103 spot 82 26s. And I think we can make a 22-year high on this thing over the coming month, to be honest. But really, until we get to the rate hike cycle from the ECB, the dollar basket is got 62% odd of euro in it. So that's when you might start to see the euro being kind of the reins being pulled in a bit there on the dollar. So look, I just wanted to make you all aware of that, and this ultra strong dollar is going to have knock-on effects across obviously the FX space. But you probably are seeing a bit of that feeding into the equities markets right now. And certainly one thing to note now, right, is that gold, obviously gold having an inverse correlation to the Dixie. I just wanted to make you aware that while we are relatively supported here, 1900s on gold, we are under a really, really strong dollar environment. So imagine if we have a massive dissipation and unwind on that dollar. Sure, gold has been generally weighed down by two things, the dollar and the real yield. All right, now the real yield is kind of sitting 2.5 to 3. People are talking about 3% by the end of the month, which is only a matter of days now on the 10-year. But if we do see a dissipation of a couple of these factors, you are going to see a very strong gold market into new all-time highs. Okay, so if we have an event, a de-risking event where the dollar comes off of these highs, rejects off of the trend that we're currently trading above here, right? If we start to have resistance here and then come back down, and with that you see the bonds like T-notes here in the bottom right go to the upside, then you're actually going to see the gold contract really get back into its stride and kind of shed a couple of the complicated correlations that we've seen come into play through COVID, right? So just one thing to be aware if you are a gold bug. Now, to the real matter of the day, which was what happened yesterday on equities. Well, we talked about it down to the range. We did. I said it. 12,939's target. We hit there quite well. Let's see. We hit there on the Globex reopen. So I mean, it was in the post to be honest. And then we've been bid up since. We're still, we're up 0.4%. But I mean, a retest on the lows here. I would like to see if we can get a long and then trade back up into the 500 EMA on the Nasdaq. I'll just put that on the chart here. Going way back on the Nasdaq, you can see that we have had periods where we did trade underneath that, both in in 2018. And then again in, I think this is 2020. Yeah, 2020, March 2020. But we didn't really spend that much time below. So as I think in a week or two, when we do kind of flush out in the downside, I think there'll be fantastic buying opportunities on the bottom of this range. But for me today, I can't actually tell you if we're going to hold the bottom of this range or not. I mean, to look at that picture, we should really look at the where we are now. And, I think this is a suitable place to get long on the short term. Maybe a retest back on the 500s, but that's not a massive trade. And I think, we are quite extended from average pricing right now in the NASDAQ. So a couple of big caps to come through on earnings today and the rest of this week. So, probably best to sit pretty and wait for that big, run of blood in the streets, so to speak. I mean, we were down about, 2 or 3% yesterday on equities. Right now, we've had this trend break on the SPOOs. We've broken down below the low of this range, which is pretty much denoted by the high of the 10th of May 21 and the low of the 19th of July 21. A pretty good line in the sun. You can see the high of day resistance on that area and trend. Just zoom right in there so you can see that right in here. So, yeah, I think more downside. That's what I think. That's what it's looking like. I mean, I think the supports below here, just get back on up and we'll find where these supports are. I mean, obviously you have these general breakdown areas here, but for the swing traders, you are going to be wanting to be short the retest on this, on the low of this range and the test on the trend. That is kind of your trend break strategy. Don't trade the break, trade the pullback. And then target these zones on the way down. For me, I always like targeting the first kind of step of support that we break off on the trend as my T1s and T2s, obviously down below here, T2s and T3s. So this gap that I've been talking about for, what is it, a year? Yeah, it's a year pretty much, a year and a month. 33 or 39.96 is even. I think we are going to trade that on the SPOOs. Excuse me, my voice is actually going here. So that's the SPOOs. I like the shorts. Dow. I mean, the Dow was holding on quite well, for a small period yesterday. But I think when it came back to around half five, there actually started to just sell down through 33,417s down into this line in the sand, and quite a lot of volatility on the 8 o'clock open this morning in Europe. You can see here a lot of these markets, the DAX, gold, bonds, all had a flush down to the downside here, putting an excess on the lows. And to the tick, 33,179s, finding support, bid on up. Lovely trade to be gotten there. The one day I am not trading the open. So what do I think is going to happen? I think we are going to auction lower. I think we're just going to find resistance generally between 33,417s and 33,587s, and we're gonna break yesterday's lows on the Dow. Oil, of course, Russia turning off the taps to Poland yesterday. So why? Well, they did that because Poland was not paying for their gas in rubles. They had been warned. They refused. Well, they got the tap turned off. So they're now open. They've opened up a ruble bank account this morning with, I think it's Gazprom Bank, handily enough, and they will be getting those taps turned back on. But a bid nonetheless seen in oil yesterday, especially 3 o'clock, bit of a flush down and bid back up. Excuse me. I don't have any water here, but we'll hammer on. Okay, so I think a pullback on oil to 98.52s is on the cards. All right, that's all I've got voice for at the moment. Listen, have a good session, and I will see you tomorrow. Cheers.